Now we look for the Farm Fresh Berhad companies. Farm Fresh Berhad has a type of business of public limited company, while their principal activities are involved in producing, distributing, and growing several plant-based and dairy products. Their organization goal are production of fresh, healthful dairy and plant-based goods to give all Malaysians high-quality nourishment through their extensive product line. Next, we move to the background of the Farm Fresh Berhad company. The business was started in 2009 by Loy Tuan Kin and Loy Tuan E, where since growing up in a small town in Perak, Loy Tuan E has great regard for agriculture and a passion for the natural world. Then he decided to buy a small piece of land in Johor and bring in 60 Holstein Jersey cows from Australia, establishing Farm Fresh Milk Sendirian Berhad. He first had trouble in finding customer. However, a big name merchant decided to give Farm Fresh a try one day. More quickly than Lloyd could have ever expected, Farm Fresh as expanding. He pulled in Khazanah Nasional, the strategic investment arm of the Malaysian government, as an investor in the company and invited the assistant of his longtime friend Azmi Zainal as a partner to help him develop his operation. Now, over a decade after their humble beginnings on a Johor farm, Farm Fresh stands as the top dairy brand in Malaysia.
Next, I'll continue with the second company that we chose is Dutch Lady Milk Industry Berhad. Okay, the types of the business of this company is public limited company. Dutch Lady Milk Industry is a large countrywide distributor of delicious and high-quality milk-based dairy products ranging from yogurt drinks and fresh milk to powdered milk and UHT. Alright, for its organization goals is to providing a better nutrition for a nation and to continuously help build a stronger Malaysia for generation to come. This helps us to fulfill our purpose of nourishing our planet and people in every stage of life.
Dutch Lady Milk Industry Berhad has been producing dairy products including cow milk since the 1960s in Malaysia, Singapore, Hong Kong, Brunei, Philippines and Vietnam. Currently, Dutch Lady Malaysia is an organization of Friesland Campina, which has established in December 2008 as a consequence of the union of Campina and Friesland Food. Its current offering include family powder milk, growing out milk, UHT milk, pasteurized milk, sterilized milk, low-fat and 0% fat drinking yogurt, and low-fat yogurt. Dutch Lady Malaysia's products are certified halal by the Halal Hub Division of the Department of Islamic Development Malaysia, which is DAKID.
I will continue with the analysis the performance for both companies. I will start with the liquidity ratio. The function is to show a firm's ability to meet its short-term financial obligation and whether the company has the resources to pay its creditors when payments are due. There are two ratios that need to be calculated, which is current ratio and quick or asset ratio. Start with the current ratio. Farm Fresh has a high current ratio of 4.61, indicating strong liquidity and ability to meet short-term obligation. Dutch Lady has a low current ratio of 0.8, suggesting potential liquidity challenges and the need for additional funds to meet short-term liabilities. Both company current ratio reflect different approaches to asset management, with Farm Fresh possibly holding excess cash or inventory and Dutch Lady potentially maintaining lower levels of inventory and receivables. In conclusion, Farm Fresh has a good liquidity position but may have difficulties in asset utilization, whereas Dutch Lady has liquidity issues that requires careful management of short-term assets and liabilities. Next, for quick or asset ratio, Farm Fresh has a strong liquidity position with a quick ratio of 3.56 indicating that the company has sufficient liquid assets to cover its short-term obligation without relying on inventory, sales or prepayment. Dash Lady, on the other hand, has a low quick ratio of 0.22, show the liquidity concern as the company may struggle to meet its short-term liabilities without depending on inventory, sales or prepayment. The difference in liquidity position between FarmFresh and Dash Lady highlights the importance of effective liquidity management in maintaining financial stability and investor confidence. In summary, FarmFresh has a stronger quick ratio indicating good liquidity and financial management, while Dash Lady face liquidity challenges and need to improve management of liquid assets for financial stability.
Next, I'll continue with the gross profit margin. FarmFresh, with a gross profit ratio of 20.48%, indicates that for every 1 ringgit of revenue, the company retains 20 cents after accounting of the cost of the goods sold. In contrast, Dash Lady boasts a higher gross profit ratio of 29.69%, meaning that the company retains 30 cents for every 1 ringgit of revenue after covering the cost of the goods sold. So comparatively, Dash Lady have a higher gross profit ratio, suggests superior cost management and profitability relative to FarmFresh. Moving on, in terms of their net profit ratio, FarmFresh, with a net profit ratio of 11.19%, indicates that for every 1 ringgit of revenue, the company retains 11 cents as a net profit after all expenses including operating costs, interest and tax are deducted. Conversely, Dash Lady has a net profit ratio of 5.02%, means that the company retains only 5 cents for every 1 ringgit of revenue after all expenses are deducted. Therefore, FarmFresh higher net profit ratio of 11.19% underscore its strong profitabilities and effective cost management, making it more efficient and in turning revenue into profit.
Now, we shall explore the return on capital employed. First, FarmFresh has a 3.73% return on capital employed. This means FarmFresh earn RM0.04 for every RM1 of capital. This comparatively low return shows that FarmFresh is not making the best use of its money, showing that there is space of development in terms of utilizing its asset and investing to generate higher return. On the other hand, Dash Lady has a significantly higher return on capital employed, which is at 21.85%. Dash Lady makes RM0.22 profit for every RM1 of capital employed. This high return reflects Dash Lady efficient use of capital to generate significant profits, demonstrating effective management and strong operational performance. Now we will be discussing the return on asset. Firstly, FarmFresh has a return on asset of 4.06%. This means for every RM1 of assets, FarmFresh generates RM0.04 in profit. While this indicates moderate effectiveness in using its asset to produce earnings, it also suggests that there is a room for improvement in maximizing asset utilization. On the other hand, Dash Lady's return on asset is 7.65%. For every RM1 of asset, Dash Lady generates RM0.08 in profit. This higher return signifies that Dash Lady is more efficient in leveraging its asset to create profit, showcasing better asset management and operational effectiveness.
So, for the first analysis for efficiency ratio, which is inventory turnover, FarmFresh and Dash Lady exhibit different levels of efficiency in managing their inventories, as evidenced by their respective inventory turnover ratios. FarmFresh has an inventory turnover of 3.57 times, which indicates that the company cycles through its inventory approximately 3.57 times a year. In contrast, Dash Lady's inventory turnover ratio stands at a higher 4.32 times, reflecting a more efficient management of inventory. This means that Dash Lady sells and replaces its inventory about 4.32 times annually, showcasing a quicker sales cycle and more streamlined inventory control processes. Comparatively, Dutch Lady's higher inventory turnover ratio signifies better inventory management and operational efficiency relative to Farm Fresh. By turning over its inventory more frequently, Dutch Lady can potentially lower storage costs, reduce the risk of inventory obsolescence, and enhance overall profitability. Next, for average collection period, Farm Fresh has an average collection period ranging from 7 to 75 days. This wide range suggests variability in the time it takes for the company to collect its receivables, while the lower end of the range, 7 days, indicates prompt payment from some customers. The upper end, 75 days, highlights a potential challenge in collecting payments on time. Dutch Lady, on the other hand, has an average collection period ranging from 1 to 60 days. This narrower range indicates a more consistent and efficient process for collecting receivables. The lower end of the range, 1 day, suggests very prompt payments from some customers, while the upper end, 60 days, is still within a relatively reasonable time frame for receivable collection. In comparison, Dutch Lady's more efficient average collection period reflects stronger credit management practices and a more reliable cash flow situation. The ability to collect receivables more quickly allows Dutch Lady to reinvest cash into an operation or reduce reliance on external financing.
I will continue with the last calculation for the efficiency ratio, which is total asset turnover. The function is to measure how effectively a company uses its asset to generate revenues or sales. Farm Fresh has a low total asset turnover ratio of 0.38, indicating potential inefficiencies in assets management and a need to improve sales generation from assets. Dutch Lady, on the other hand, has a high total asset turnover ratio of 3.05, showcasing efficient assets utilization and strong revenue generation. The comparison between Farm Fresh and Dutch Lady highlights the significant difference in asset efficiency, with Dutch Lady outperforming in terms of leveraging assets for revenue generation. Overall, Dutch Lady higher return on assets reflect a stronger performance in converting assets into profitable returns compared to Farm Fresh. For the debt ratio, Farm Fresh debt ratio is 39.19%, demonstrating a balanced approach to leverage and a lower risk of bankruptcy. Dutch Lady has a larger debt ratio, which is 53.82%, indicating a more aggressive financing plan and greater financial risk. Dutch Lady higher debt ratio indicates a more leveraged financial structure than Farm Fresh, which may provide growth prospect but also carries greater financial risk. In conclusion, Dutch Lady has a higher debt ratio compared to Farm Fresh, which may provide growth opportunities but also entails higher financial risk, while Farm Fresh more conservative approach offers financial stability and lower risk of crisis.
Next, we move to the second leverage analysis, which is debt to equity ratio. Farm Fresh has a debt to equity ratio of 64.45%, indicating that the company has 64 cents of debt for every RM ringgit of equity. While Dutch Lady has a higher debt to equity ratio of 116.56%, meaning that the company has RM 1 ringgit 17 cents of debt for every 1 ringgit of equity. To conclude, Farm Fresh debt to equity ratio of 64.45% indicate a more conservative and balanced in financing approach, favoring financial stability and lower risk. In contrast, Dutch Lady debt to equity ratio of 116.56% highlight a more leveraged position, suggesting a higher risk-reward profile. And the last one is time interest earn ratio. Farm Fresh has a time interest earn ratio of 23.84 times, indicating that the company earns RM 23 ringgit 84 cents for every RM 1 ringgit of interest expense, while Dutch Lady has a time interest earn ratio of 23.88 times, meaning that the company earns RM 23 ringgit 88 cents for every RM 1 ringgit of interest expense. Therefore, both Farm Fresh and Dutch Lady exhibit strong and virtually identical time interest earn ratio of 23.84 and 23.88 times, respectively. This ratio reflects the company's strong financial health and low risk regarding their ability to service debt. Both companies' high interest coverage ratio indicate that they are well positioned to meet their interest obligations, suggesting that they generate ample earning relative to their interest expenses.
To conclude, we can summarize the financial performance between FarmFresh and Dash Lady in 4 key areas. FarmFresh has a strong liquidity but may be inefficient, whereas Dash Lady has liquidity issue but employ aggressive asset management strategies. In terms of profitability, FarmFresh has a strong net profit ratio but a moderate gross profit ratio, while Dash Lady has a higher gross profit ratio but a lower net profit ratio. In terms of efficiency, FarmFresh has moderate assets and inventory management, whereas Dash Lady excel in this area, demonstrating superior management practice. FarmFresh takes a conservative approach with a lower risk, whereas Dash Lady use higher leverage, which carries more risk but has higher potential return. As a conclusion, both companies have high interest coverage ratio, indicating a solid ability to meet interest obligations.
So, for the potential supplier and investor, based on the comprehensive analysis of performance and the subsequent conclusion, Dash Lady emerged as a highly attractive option for both potential suppliers and investors. Consequently, Dash Lady with its superior operational efficiency, profitability, and effective resource management stands out as the more attractive option for potential suppliers and investors.